So I know we touched on this topic before. I mean, we kind of touched on it, but we didn't go into detail. But I want to talk more about revenue streams in this lesson. So we're going to talk about all the different ways you can collect money for your clients in assisted living. So assisted living facilities can receive payments through various sources to cover the cost and care of the services provided, which we talked about before in this presentation. We'll do a deeper dive. One is private pay. So that's when the client pays you directly from their bank account, or their family will come together and they'll put money in an account and they'll pay you. That's just private pay. That's like you have any tenant. Then you have other ways, such as long-term care insurance. Now, how that works is at some point in the past, before the client got too old to not really apply, they will have long-term care insurance. It's just like car insurance or home insurance. So just in case they ever need a facility like assisted living or any kind of long-term care, the insurance will cover it. They'll cover it to a certain amount. Some is $3,000, some is $4,000, some is $5,000, depending on the level of long-term care insurance they have. Now, if you accept long-term care insurance, and just like any other kind of structured payments through any other entities, they're going to have some stipulations. Like some long-term care insurances, they'll only pay ALFs, which is assisted living facilities, if you have a sprinkler system or if you have a private bed, or they all have different insurances have their different stipulations where they'll pay you. But normally it's a stable source of income. Once they're in, they pay you directly each month, direct deposit, and you just bill. It's great. And even if you have like ad hoc services like we talked about before, they'll even cover some of those ad hoc services. Other one is some clients can get reverse mortgages, which I've dealt with before. So, and it's another avenue where you can partner with, a person, and they can actually, feed you business, and then you can feed them business. So, I gave you the scenario before about Ms. Jones. She slipped and fell. She went to a nursing home. So I'll back it up. We'll talk about it again. So say you have Ms. Johnson, she slips and falls. She lives at home. She slips and falls. She goes to the hospital. The hospital said you need to go to a nursing and rehab facility. Then from there, the nursing and rehab facility say, well, it's not really safe for you to go home by yourself. Why don't you go to an assisted living facility? They send her to an assisted living facility to live. Her family tours, they agree on it. Then they're looking at, okay, well, how are we going to pay this? Do they want to pay private pay? They don't have long-term care insurance, but they own a house that they've had since the 40s or 50s, 60s, that they own free and clear. They can then get a reverse mortgage where, they'll get a mortgage on the house. They don't have any payments, but when the house is ready to sell or they pass on, that mortgage can either go to the bank, or the family can settle it some kind of way. I don't know all the details, but you can also partner with reverse mortgage companies and then refer them to these companies. The companies can then give you a referral fee. And then in turn, if they ever get any clients that may need assisted living in your area, they can refer them to you. So banks are mortgage lenders that service reverse mortgages. It should be one of your contacts in your Rolodex to have partnership agreements with them with your facility, because you can get paid for referral, even if the person doesn't even use your assisted living facility. Say if they like another facility that's closer to their son's house, and you refer them to the company to do reverse mortgage, then they can give you that mortgage company will still give you a referral fee. So going back to the original point, if you have a client, she likes your facility, she moves in, you can refer them to a place to do a company that does reverse mortgages. They can then take a line of credit out on their house, a reverse mortgage out on that house, and they can pay you monthly through that reverse mortgage. And it's just like getting cash, or they'll direct deposit it. It's completely safe, and it's a good way to get A, referral, and B,